Tim Jones with Reliant Bank. I'm out there on Roll Oaks, down past the Home Depot on the left hand, on that nice looking, futuristic looking building. It sits there on the corner, so please come see me, and we'd love to give you a tour of the Reliant family. Today we're going to talk about loans. How many people know about what a HELOC is by any chance? Okay. Tell me what a HELOC is.
It's where you get your house, get some money that you could use over a time when you might need it.
Okay. Is it something that you can get if you happen to lose your job? No. And why is that? Because the bank wants to make sure that you can pay the loan back, right? It's kind of like insurance on a car. You don't want to go out and have an accident and say, oh, I need that insurance. And it's not going to cover it, is it? So that's the same thing with the HELOC. You want to go ahead and get that before you need it. So HELOC is a home equity line of credit, okay? And since Derek answered that, good job, Derek.
With the radio.
Yeah, there we go. No, not yet.
Has to be another question. Sorry.
All right, what is a HELOAN?
A HELOAN?
It's a one-time shot where they can't get any more, basically. It's a one-time cast of a loan.
That is
On
correct.
That's not
equity.
fair. You're in the mortgage.
Yes?
A HELOAN is a one-time that you pull money out, and it's a fixed amount of time, and you start paying back immediately. A HELOC is where you tap into your home equity. You can only take as much as you want. So if you get a $100,000 home equity line of credit, you only need $20,000. You're only paying interest on that $20,000. You still have that other reserve. Typically, a HELOC is a 10-year fixed term. Okay, it's not typically not renewable. There is an end to it. You can always get that HELOC refinance if you wanted to, but you have to go through the same process. What else can you use a HELOAN for, or a HELOC?
Home improvements.
Home improvements. Okay, great. What else can you do with it?
Student
Emergency.
Education. You can use a HELOC for just about anything you want. You can also see your tax advisor, and most times that HELOC, the money that you're using off it, is tax deductible, unlike a credit card or something else that you go out and tap into. Tell me what the big difference between a HELOC and a HELOAN is again. I think Kathy had it nailed it.
Oh.
HELOAN is a one-time.
Mhm.
Okay. You're pulling all the money out at one time, and you start to pay interest on that money all in, and it's a term of it that you pay back. Okay. So just think about that. All the money at one time, or when you need it. Okay. So tell me, what is, when we're going through and talking about loans, what is some of the process that we have to go through on a HELOC? What would be the first thing that we do as a bank and as a customer?
Make sure you have equity.
Equity. Okay. What else?
Probably pull a
Credit.
report.
Right. What else?
Job.
Make sure you have a job and a way to pay it back. Okay. What else?
Other debts?
Debts. DTI. That's the next one on the page. What is DTI? What does it stand for?
Debt to income ratio?
Debt to income. Great job, Peter. Why is debt to income so important?
It needs to be under, what, 50% or something?
I think it's 41%. Is that the magic number?
About 43%. Okay. And why do we want to make sure that the DTI is in line?
So they can pay it back.
Yeah, exactly. So you make sure that you can pay it back. Okay. We're in a business to make money, of course, but we also want to help the consumer, and we don't want to get your consumer or the person we're making a loan to in a bind. That is what our job is for. Do you have the means to pay it back on time? Okay, so we don't want to overextend yourself. So that's why we do that. And everybody says, well, what does that matter? We're looking after your your well-being, so we don't want to get you in trouble. But what is LTV?
Loan to value.
Loan to value. Bob?
I don't know what that means.
Isn't the magic number 80%?
Wow.
80% is one of the magic numbers that we look for. Yes.
Unless you're a veteran, and then it can be 100%.
Chip clear?
Reliant doesn't go to 100%. There's very few banks that do 100%. We do 89.9%.
Okay.
So when you're looking at a loan to value, you want to make sure that you have enough equity in your home to be able to make that loan, okay? Loan to value. So the 80%, at 80% loan to value, you can do a 10-year term on that. At 85, you can still do a 10-year term, but the interest probably goes up a little bit. At 89.9% loan to value, what does that mean to you guys? We're giving out more money, right, on that asset, and we want to make sure that we can get that loan paid off, so we actually decrease the amount of time that you can pay it off. So instead of the 10-year term, it goes down to a 5-year term, okay? So yes, can we do it? Absolutely. Are there restrictions on that? There is, but it's still doable, okay? So it all depends on how much money you need, for the reasons that you need it for, to find out what best fits you. And that's why that whole process, when you come in and talk to me about a loan, we'll sit down and we'll look at all the aspects that you're trying to do and what you're trying to accomplish to make sure you're into the right type of product. Also, we talked about the LTV percentage and what it is. 80% is quite right here. The magic number is probably the sweet spot of all of them, okay? On this back page, we have some list of terms and all everything that you might ever want to know about HELOCs and HELOANs. I'm not going to go through and read all of it right now, but we have, if you want to read it in your spare time, please do so. It's kind of a quick synopsis of what we just covered. Questions on a HELOC or a HELOAN?
Say it again?
Questions on a HELOC or a HELOAN? Oh, come on, somebody's got a question.
So the HELOAN, you said is a one-time loan that you get?
Yes, if you want to do like say you need $50,000, you can do a HELOAN on your home, and you're going to get all $50,000 right then and there, and you start paying on that right then and there, okay? If you get a HELOC, you have cash reserves. So say you get a $100,000 HELOC, but you only need to use $20,000 of that, you're only paying interest on that $20,000 at that point, okay? So you can always pull more out of that because you have $100,000 out here sitting waiting for you to need it when you need it for a 10-year term. So in case your air conditioner goes out, or you want to do hardwood floors, or you lose your job, or something in that catastrophic, you have that ability to pull that money out, okay? So if you happen to lose your job and you come to me and say, Tim, I need to do a HELOC, 9 times out of 10, we're not going to be able to do it because at that point you have no means to pay your HELOC back. I'm not saying it's impossible. You may have some other assets out there that you can tap into. But the majority of the time, you definitely need a job. So you don't want to wait. Like that analogy I said, you want to have car insurance before you go out and have a wreck. You want to have a HELOC before you get into trouble. So HELOC are very easy to do. Application process, pull your credit, make sure that your DTI and LTV is in line, and some other documentations that we need. It usually takes about 30 to 45 days. And the reason for that is we're kind of backed up, all the industry is, because of the appraisal process. We actually do a drive-by, we actually have somebody go out there and inspect your home to make sure it's where you said the value is. Okay?
What's like there's a rate here on HELOC, what's a normal rate on HELOAN?
Good question, Catherine. Your rates are going to be dependent on your credit report. Okay? So if you have excellent credit with us, we will actually come in at prime. Does anybody know what prime is right now on interest rates? 3.50. Okay? Cheap money, guys. Cheap money to buy. Okay? And if your credit is not so bad, then the interest rates goes up a little bit more. It doesn't go up a lot. 1 basis points, depending on that. But that's all stuff that we can talk about when we come in and make an appointment with me and fill out the information. So we'd love to have everybody come in and talk to me about HELOCs. I think they're the best product, one of the best products we do have. Again, it's like an insurance policy. You never know when you're going to need it, but it's great to have it there when you do need it. Okay? Yes?
You have a HELOC, but now your home is worth more and you wanted to get a larger one. Is that possible to do that?
Yes, it is. The value of the home. Typically, the value of the home won't go up that much, in a matter of years. But after a few years, if you want to tap into more, yes, you do a modification.
New appraisal.
New appraisal. Absolutely. Not going to just take your word for it, but we'll make sure that we do our due diligence. Send the appraisal back.
Who pays the cost of the appraisal?
You guys get to do that.
So do you have to have your mortgage, like my mortgage would have to be with your bank in order to get a HELOC?
No, ma'am, they do not. We do more HELOCs all the time for customers who have their mortgages at other institutions. We'd love to have them here. Can that be done? Absolutely. We can do a refi and a HELOC all at the same time.
And you can do a HELOC or HELOAN when people are purchasing too, can't you?
That is correct. We can do first purchase HELOC.
So they only
Purchase
put
money.
10% down instead of
They
20.
determine how to do that.
It's a good way to avoid mortgage insurance.
HELOC. Absolutely.
Which is a nasty thing.
Which is a nasty thing.
Well, it can be deductible, it's not bad.